I pay myself a salary or a dividend? This decision actually saved me money on taxes? Are there any other ways to pay myself from my business aside from salaries and dividends? Hey everybody, my name's Hervin. I'm a financial planner. This video is part of our series for small businesses and not so small business owners. We want to help you ensure that your business actually serves you and you continue to own your business and not the other way around. In this video, we're going to address one of the most common questions small business owners have. What's the best way to pay myself from my corporation? The truth is, there's really only two ways to pay yourself as a business owner in Canada. It's dividends or salaries. Every other method is just a variant of those two. And what it would typically do is just change the timing on when you actually have to realize the tax liability. We'll examine the pros and cons of each method throughout this playlist, use examples to determine which approach actually saves you the most in taxes. So be sure to subscribe and continue to watch the rest of the videos and we'll dive in. We walk our clients through this all the time because there are so many misconceptions that lead to unnecessary complexity and sometimes unnecessary expenses. So let's start with the basics. Now, to make this as effective as possible, we really need to get clear with the three entities that are involved in this analysis. You, the business owner, Mr. or Mrs. Badass that wanted to take on the challenge of entrepreneurship. So kudos to you. Then there's your business, the entity that you've created to solve the need in the marketplace and hopefully a vehicle that's helping you with your personal financial freedom. Last but not the least, the stepmother who wants to take away from all of your shine, the CRA. All kidding aside, that's really the three basics that we need to understand right now. It's you, your business, and the CRA. This is important because for the most part, the CRA wants to get its fair share from your economic activity, whether that's coming from you alone, your business alone, or a combined total from you and your business. From the CRA's point of view, they have to collect the same total amount of taxes, whichever way you pay yourself. This concept is known as tax integration. Allow me to demonstrate. Let's meet Christine. Christine owns and operates Home Glam, an interior design and renovation studio. It will bill $700,000 in revenue in 2023. Her total expenses, salaries, studio space, staging rentals, and so on totals to $400,000, leaving Home Glam a total of $300,000 in profits before owner's compensation. I'll assume that she's in Alberta and she needs an after-tax income of $100,000 this year. Using only basic tax assumptions, she would need to declare a salary of $140,842. Now, a point of clarity here. Regardless if we call it a salary or a wage or a bonus, it'll be treated the same way. It's T4 taxable income. If you haven't really paid yourself a salary before, this is very similar to the compensation you receive as an employee. And that's the relationship here. Christine will be getting paid a salary as an employee of Home Glam. So again, let's go back to this example. We'll declare a salary of $140,842. She will need to pay $24,577 in federal taxes and then $11,508 to the province. Next, there's $3,754.45 in CPP contributions plus $1,002.45 in EI premiums. This leaves her with $100,000 in her pocket after paying taxes, CPP, and EI. But we're not done. How does this affect her corporation? The whole $140,842 will be deductible plus the employer portions of CPP and EI contributions. This is again ending up at $3,754.45 for CPP and $1,403.43 for EI, Take note that the employer portion for EI is bigger than the personal contributions. The deductible expenses attributable to Christine's compensation, and this is deductible to Home Glam, adds up to $145,999.88. This leaves Home Glam with a total profit of $154,000.12. The small business tax rate in Alberta is 11%. So the total tax payable for Home Glam is $16,940 and some decimal points. This leaves Home Glam with $137,060 in its retained earnings. If this video clarifies a point or two for you, please leave us a comment. A simple comment telling us where you're watching this from helps YouTube understand that this content is actually worth watching. So thank you for helping us grow. It means a lot. Just like you, I'm a small business owner myself, so I really appreciate it. Let's now review the dividend situation. What if instead of paying Christine a salary, Home Glam declares a dividend? The dividends that need to be paid in order for Christine to net $100,000 is calculated differently. Christine needs to receive a total of $121,476 in dividends. She'll pay $12,652 in federal taxes and $8,824 to the province. Dividends do not attract CPP or EI premiums, so that's the only tax liability we need to worry about, totaling to $21,476. Now, at first glance, that looks like we saved a bunch of money in taxes, but let's review the impact to Home Glam. Now, since dividends are not considered tax deductible to the company, Home Glam has to pay the small business tax rate of 11% to the total profit of $300,000. This becomes a $33,000 tax payable to the company. Where does that leave us then? So $300,000 in profit less $33,000 in taxes. There's $267,000 in earnings in the company, but $121,476 again is shuttled through and paid in dividends to Christine. Home Glam is then left with $145,524. Again, at first glance, this looks very attractive. That's a difference of $8,464 compared to the salary payment scenario. Wouldn't you love to save that much money? But not so fast. Let's roll back the tape here so that we can figure out where these dollars came from. Dividends do not attract CPP or EI premiums.
Dividends do not attract CPP or EI premiums.
So the difference here then is easily explained by not having to pay CPP or EI. The total combined premiums for CPP is $7,508.90 for 2023. The total combined premiums for EI is $2,405.88. $1,002.45 to Christine, $1,403.43 to Home Glam. So by paying herself dividends only, she forgoes $9,914.78 in benefit contributions. But Home Glam only increases its retained earnings, and it's only improved by $8,464. This tells me that the pure dividend strategy was actually disadvantageous. She has a little bit more money now, but she forgoes CPP, retirement income, and the protection during a disability. If she became totally disabled, EI will pay a benefit as well as CPP disability, assuming that she has met the minimum contributory periods. So for those that say they will forgo CPP premiums because it's just a tax, and they'll invest the difference, they have to overcome not only the benefits of CPP as a pension in retirement, but also as a form of social insurance programming because of the disability payments that would otherwise be available to somebody that is making CPP contributions. Of course, there are more nuances that must be considered, but for the most part, the decision to pay yourself purely in dividends or purely in salary tends to wash out if you're only looking at it from a tax savings perspective, especially if you're a solo business owner. If Christine and Home Glam is in a hypergrowth state, for example, that extra $8,400 in the corp may yield better returns than the CPP or EI benefit. On the other hand, if the 8,400 will just sit there in trapped corporate dollars in corporate cash that earns nothing with no clear direction, it doesn't make sense to do this. To answer the question that I posed earlier, paying yourself a salary purely versus paying yourself a dividend does not actually result in a meaningful tax difference. It's more about how you deploy the dollars thereafter. At least not well enough for you to focus purely on tax reasons to change your compensation model. In the next video, I'll address the benefits of paying yourself a salary and break down its pros and cons, continuing through with Christine's example. You can watch that right here. In the video after that, I'll do the opposite, give you the pros and cons of paying purely in dividends, as well as scenarios that will alter why one would be more beneficial over the other. I hope that this has earned a subscription. Watch the rest of the playlist because we really want to make sure that we educate more of our clients and more people about this. Talk soon. Happy planning. Much love. Bye.